Good morning, everybody, and welcome to the Daily Energy Markets Podcast. Ramadan Kareem to everybody celebrating the holy month of Ramadan. We opened this week with oil prices trading a little bit down, 81.76 on Brent. We are essentially back where we were a month ago after going up and sort of bouncing our head on 84, just shy of $84 on Brent. Omar Najia, Global Head of Derivatives at BB Energy. Have we banged our head on the ceiling of this oil market's current cycle and we're going downward, or is this just a pause before the next ascendancy? Your thoughts on the oil markets this mid-March as we move towards the end of Q1?
So early Feb, 5th of Feb or something like that, we were trading down at $71.50 on WTI. We're currently trading at 77.55, which is $6 higher, right? The highs on WTI are about 80.50, which is plus or minus $3 from where we are now. Nothing moves in a straight line, unfortunately. Doesn't keep going up and up and up and then down, 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 right? So what happens with markets if you've got three trends, up, down, and my favorite, which is sideways. So right now we're basically going sideways. I think whether the market wants to come off a little bit more or head straight up from here, the destination in my mind is not in doubt, which is basically new all-time highs for oil in a trending fashion, higher and higher and higher. So basically on WTI, that's $130. I don't know if it'll happen this year, don't know if it'll happen next year, but I think basically that low at $67 stays for a very long time, and we set new all-time highs. So right now, I would basically be buying the dip or buying right here, dependent on how much risk you want to take on. But I think over time we're going to go to all-time new highs.
Paul Horsnell, Head of Commodities Research at Standard Chartered Bank. Paul, typically coming out of the first quarter, we would be moving into a more stronger demand in the sort of annual cycle for oil products, moving towards the big bumper demand window of the US driving season. Is it upward from here, given the annual average trend cycle in demand for oil products?
Certainly demand should increase from here. Q1 is seasonally the weakest quarter because January is so low. I think then from here, demand signals are still very good. It's holding up very well. I mean, our own global demand growth forecast for the year is now sitting about 1.65 million barrels a day. We started 3 months ago about 1.5 million barrels a day, so gradually creeping upwards. But the big swing, I think you're right, from the surpluses of January, what's taken us into deficits really for the rest of H1 is that seasonal swing up in demand together with continuing OPEC plus discipline. So we think the market is going to be in a deficit of about 1 million barrels a day, just over for Q2, following on from a supply deficit in Q1, which I think was unexpected by the market and is unseasonal. So yes, you're right. It's seasonal demand helping, but we're starting from a base where we had a very unseasonal Q1. Don't normally get a draw in Q1, and compared to last year, where there was a huge rate surplus, it shows the year-on-year tightening has been of the order of 3 million barrels a day. But half of that is supply and half of that's demand.
Max Torres, managing partner at Plata Energy, currently in Venezuela, which is great to get your insights from the ground there, Max, because of course, a lot of this balance depends on where oil production goes in the Americas as a whole. We saw big increases last year. Will we see again this year? Your outlook from Venezuela?
Morning, Sean. Morning, guys. Thank you for having me.
Very early morning, I think, is probably the right word.
Yeah, here in Caracas, about 2 a.m. or something,
yes,
2:30 a.m. or something.
Well, we appreciate your sticking with
night.
us.
Of course. Well, my pleasure. Yes, indeed. here, you know, in the Americas in general, you're seeing, you know, an increase in supply, as we discussed in the last time, you know, Guyana being, you know, the main player, Brazil, US, big productions. And, you know, essentially what you're seeing is, supply, you know, on the side of the supply in the Americas in general. We're going to see probably some movements in Argentina. And again, you know, Venezuela is you know, the outlier here that probably is going to give some surprises. I've been here in Venezuela, in Caracas, already a month. A lot of things going on. A lot of companies, you know, essentially, I think we all know that sanctions were lifted in October.
Are they going to stay lifted?
Well, most likely they're going to come back into place on April 18th. That's the date that everybody's keeping in mind. And I think it's going to be, you know, they're going to, you know, we're going to see sanctions again on April. So people are rushing, you know, to sign deals, do deals, you know, put offices, you know, hire, you know, rig service companies. You know, there's a lot of activity. And in the last 3 months,
even if the expectation is that sanctions are going to come back. I mean, the general, just for reminder, the idea was that the U.S. government agreed to lift sanctions on the grounds that the government in Caracas allows the opposition to run in the elections. Apparently that hasn't happened, but so sanctions are likely to come back.
You're right. You're right. That was the assumption, and that was the condition, and essentially that is not going to happen. Apparently, elections they're going to be here July 28th. That's official. They're going to have elections here. Opposition has been largely, you know, banned, so there's going to be, you know, very little opposition presence. There are other parties, you know, but essentially the condition hasn't been met. So we're expecting sanctions, as I said, April 18th. Okay. Despite that fact, people have been, you know, as I said, rushing in, large companies, medium companies, new investors, Latin American, you know, mid-sized companies, Europeans. Repsol just recently signed a new field. It's called Barua Motatan, is in the Lake Maracaibo. Repsol is making a huge, not huge, but important landing, you know, signing new contracts, increasing the size of the offices and operations, E&I as well. Petrobras recently had a meeting with the oil minister, I think, you know, last week. I'm here working on behalf of you know, very large corporation as well. You know, I'm working on a very large project in the Faja. So you know, the expectations are that we're going to have sanctions, but the expectation.
What, everybody's just going to ignore?
Yeah.
Ignore them? Is that what we're...
No. It's not going to. It's going to be ignored. But I think the expectation is that the sanctions are going to be lighter than they were before. And people.
So they'll be just kind of another version of fake sanctions. Version. Yeah, like we've sort of fig leaves, like we're seeing in Iran and Russia to a great extent. Omar Najia, Omar, I wanted to get your thoughts on the direction of travel here in terms of sentiment outlook, as you know, guided by gold and Bitcoin, two commodities, if that's what they are. I'm not sure what they are really at this point, but ultimately things you watch closely. Bitcoin had been a bellwether for risk-on appetite, and gold typically a bellwether for risk-off appetite, but yet both are reaching records. What does that tell you as you look at your tea leaves?
And that tells me what it's been telling me for a very, very long time, which is, one, the world is inflationary, not deflationary. So whatever you read in the mainstream media, whatever you see on TV, MSNBC, CBS, CNN, whatever, just think the exact opposite. So you want to do basically like a 180, right? So Bitcoin is not good, buy Bitcoin. Gold is basically not good. They wheel out Warren Buffett if he's still alive, or maybe, Charlie Munger, but I think he died. Maybe they'll wheel him out again. I don't know. He tells you gold does nothing, so buy it. They'll tell you basically that you want to own Berkshire Hathaway stock, sell it. So basically the reason, even if you look at the US stock market, right? If you look at the US stock market, I saw an interesting bit of statistics saying basically that Nvidia and Microsoft are now have a bigger market cap than the whole of the Nikkei index, basically the Japanese index, right?
I thought you said the whole of the world, but
yeah. But
soon.
If you add Google Alphabet, they're bigger than the whole of the European stock indices, including if you add the FTSE on top of it, blah, blah, blah. So what's that telling you? That's telling you that money's flowing into the US economy, not based on people saying, yeah, earnings to price ratio is 2.27. I expect demand for iPhones to be 3.72. And before it was supposed to be 2.9. So now we better buy. No, it's none of that stuff. Basically, there's a lot of cash out there, okay, because interest rates are not high enough. There's massive amounts of cash. The US is running a $2 trillion deficit. The Western world is leveraged up to the hilt, and the only thing they can do is borrow more. So basically, all that cash has to find a home. You can't basically stick it in your pocket. Why? Because basically you're losing so much due to inflation. So you have to put it somewhere. So if I have to put it somewhere, 99% of people like the stock market because there is no alternative. So what do? They buy just those 7 stocks. And basically, if you look at something like gold has always been a traditional safe haven play, but it's also something to own if basically the dollar's being devalued. So that's why gold's going up. And Bitcoin is a commodity. And the difference between Bitcoin and everything else is that there is no issuer of Bitcoin. You can't go anywhere and say to anybody that I want more Bitcoin, print more Bitcoin, make more Bitcoin. Doesn't happen. Will never happen. So, and it's the only commodity on the face of this earth. So if gold prices go to 5,000, they'll start taking gold out of people's mouths to sell it, right? Or dig more or whatever. But Bitcoin, you just can't make more. Once it gets to 21, you can't increase the supply. In fact, come April, the supply is going down. So basically, I think it's a reflection of the US dollar. I think it's a reflection of where interest rates are. I think it's a reflection that the Fed will have no alternative but to actually cut interest rates. What at the same time, everybody keeps repeating the same thing. Deflation and interest rates are going to come off because we've beaten inflation. We haven't done any of that stuff. That's just like a smoke and mirrors in front of your eyes. Inflation is going to roar, but they basically don't want you to see it. So that's why oil is going to go to all-time highs as well.
Paul, your thoughts just picking up on that, because inevitably the direction of travel, we're seeing the financial markets, obviously the equity markets, but also the Bitcoin and gold reaching record levels. Oil still languishing, somewhat uninterested, and commodities in general not doing so well. Your thoughts on where, what to be guided by? The Fed, of course, are looking at interest rates, looking very closely with the hand on the lever. Are they going to cut based on the outlook? If they were looking at the equity markets, they wouldn't be cutting. Maybe if they were looking at the commodity markets, they would be cutting. What are your thoughts on which to be guided by on the direction of the macro market?
Yeah, well, I think if you're a commodity market investor, then you stick to the commodity markets. I mean, there's extra noise and there's an extra layer brought in from the macro side, and obviously there are conditions where it's harder for commodities to rally than others. But I think we've sort of had a period where the dominance of looking at the macro indicators perhaps got a little bit too much. And we're now sort of perhaps at the point where we're seeing investors starting to look more at those fundamentals, and in particular taking two of the main elements of the bearish case. The bearish case, remember, was mainly macro, but on top of that, a view that US oil supply was going to grow very fast this year, that China's oil demand was going to be very weak this year. And I think now seeing more people looking at those more seriously and realizing, well, actually, no, China's oil demand is perfectly all right in terms of absolute growth. There's no it surprised the upside last year, or probably surprised to the upside this year, and also, perhaps more importantly, for moving away a bit from the dominance of the macro side, questioning that assumption of very fast US supply growth this year. And when we think from this point in incremental terms, US supply isn't going to finish the year particularly different from where it is now. It's going to bubble around this kind of 13.3, 13.2, 13.4 pretty much for the rest of the year. So some year-on-year growth, but incrementally from here, that's it for the moment. There's nothing more coming incrementally. We're getting much more interest, I think, from clients on what are commodity market questions, less on the macro side, whereas perhaps at the start of the year and through Q4, surprisingly few questions about commodity market fundamentals, investors really being driven by those sort of macro concerns. So I'd still say for most investors, look a little bit more at the commodities, but obviously, as Omar's explained, that macro context is very important.
The situation, Max, in Latin America sort of sits on the doorstep of some promise. New government in Argentina, the easing of sanctions in Venezuela, the removal or the easing, but ultimately a pathway to new oil production. Similarly in Guyana rather, and in Brazil. Your thoughts, I mean, putting aside the US, like North America, but if Latin America, what could they add this year in terms of barrels, new supply over 24 and again in 25 as the new Argentinian government gets their legs under the table, so to speak? What's the likely addition here in hundreds of thousands of barrels, do you think? I mean, we've just heard Paul there say that North America could remain flat for the year. Your thoughts for Latin America as a whole?
Yeah, thank you, Sean. Yeah, North America is going to remain in 13, north of 13. That's going to be the number. We're going to have elections end of the year, so maybe next year we're going to see probably some political changes on the dynamics on North America.
Why, just to touch on that point, why will North America not add this year? I mean, $80 or thereabouts. Demand is very solid. The US economy is growing. As Omar said, that the money is being printed. There's lots of inflation in the system. Why wouldn't US oil producers continue to expand capacity?
Well, I think one is this election year, so people are just expecting new policies next year. That's one thing, and the other thing is there's been a lot of consolidation in the last year or so, and I think that consolidation needs to become operative, and I think that's going to take a while. So I think those two things are probably the thing that why the oil is going to remain. Production is going to remain, almost flat for this year. I think next year we're going to start seeing some new activity. And going to your original question about Latin America, you're right. I think Latin America as a whole is seeing a change. Venezuela easing sanctions, that's one. Argentina having a new government. This new government is probably going to put wings on the oil industry, and we're going to see new players in Vaca Muerta. As a matter of fact, Equinor is shooting seismic, in the Malvinas and Magallanes Basin offshore. We're going to see some drilling, probably, in the northern part of the Argentina platform by Shell. Also, Uruguay is going to see some wells. So, most likely this government is going to, as I said, do some new political changes that is going to, see some new activity on the oil industry. Argentina is a mature country, so I don't expect big news or big swings on production, but we're going to see an increase there. And we're going to see an increase in activity and investment. I think the big news is Guyana again. Guyana, is today I think is 700,000 or so, near 700,000, and it's going to be probably 1.5 million next year, or in the 2026. So Guyana is the main provider here of supply in Latin America. And again, if we see Venezuela action as I've seen in the last month or 2 months, I expect Venezuela to be providing something in the range of 500,000, an increase of 500,000. Right now is near 700,000, so probably we're going to see something close to a million or 1.2 next year if this activity continues. Chevron is taking positions, Maracaibo Basin, Faja. So you're seeing a lot of activities. I said, Chevron has been very aggressive. They already have drilling plans, they have rigs, they have people. So my expectation is that Venezuela is going to be a player next year, as well as Guyana. They're having some issues on the border, as you know. Guyana, Venezuela, they share a border, and they're having some issues there. But my expectation is that those two countries are going to be the stars, next year as far as supply goes.
Let's go to the survey question, which is looking a little bit sort of on the back of that question of new supply. Aramco says in its earnings yesterday reported that suspension of its planned 1 million barrel a day oil production capacity increase, which it announced last month, or was it announced earlier in the first quarter, that it wasn't going to proceed with this capacity increase. And they said it's likely to reduce its capex spend by $40 billion between now and 2028. So, and significant savings that Saudi Arabia plans to pump into other areas of its economy. It allows Aramco to return a lot more dividends to the central government to spend on their economic reform program. But my question to you is, do you expect other producers to fill this new capacity gap that Saudi is not proceeding with? This 1 million barrel a day, this $40 billion of cost. I mean, that's what it would have cost in Saudi. Of course, 1 million barrels a day of new capacity somewhere else might cost a lot more than that. But do you expect other producers to fill this new capacity gap? Some of the ideas that were mentioned there by Max, yes or no? Omar, we have since in the last week also the announcement that OPEC were going to roll over their cuts through the full extent of the second quarter. I wanted to get your views on whether that was your thoughts on that from a sort of supply point of view, and Saudi Aramco announcing that its official selling price into the second quarter for Asia Arab light crude would be rising its selling price into Asia. But first, your thoughts on OPEC Plus rolling its cuts through to the second quarter.
Well, I mean, I always believe that people are sane. It doesn't matter if it's OPEC or the Fed, right? It's the same. People are sane. They do what's in their best interest to do. So their best interest is to keep prices high. The reason, excuse me, Aramco didn't invest in more spare capacity is because everybody's telling them that, the age of oil is finished and we don't want your oil, right? So why would you spend $40 billion? Blah blah blah. I mean, it would be insane. So they're sane. So basically, what happens now when you tell people that you're surplus to requirements and we don't need your oil and it's all going to zero and we're going to use plants and waves and all the rest of it, right? They say we want prices as high as possible to make hay while the sun shines, right? So they're going to keep on doing it. That's the same thing to do. Expecting them to do something different to help, I don't know what and I don't know who, is frankly insane. So yeah,
But
more
in terms
cohesion.
of the survey question, does that leave a gap though, that for other, but they may not proceed with it for their own reasons, but
There
from
is no
a macro supply point of view, does others fill that gap, or it's just
So basically
undeveloped?
so let's say I'm an other, right? I come in
Yeah.
and I say, you know what? OPEC's got a lot of spare capacity, which they're not using. So I'm going to invest 40 billion right now to start, exploring and all the rest of it. And I'm not going to worry about that spare capacity, because if they bring it on, I go completely bankrupt. That's fine. So obviously they're not going to invest a single penny, right? So OPEC basically, it has large spare capacity and is cutting supply, and nobody can challenge them. Nobody. And people keep going on about shale. Shale is dead, has been dead, about as dead as a dodo, because shale needs a lot of cash. It needs low interest rates, and that's never coming back. So basically, you come to me and you say, or I come to you, I'm like, Sean, please invest in my shale company. You're going to say, no, I'm going to buy NVIDIA. Much better option. So you can, and basically remember, shale is not like government-driven invested. It's like a thing that makes money. So nobody's going to invest in shale. Nobody's going to invest in oil. But you can't even get loans from banks. So no.
Paul, your thoughts on the same question, because obviously this was a big story earlier in the quarter when Saudi announced it wasn't going to proceed with it. Now we're seeing a sort of a price tag on the savings they're making. And your comment earlier that the US unlikely to increase capacity much this year. Is there a domino, do you think, from this Saudi decision that encourages others to fill the gap, or encourages others to do the same and pull back on future capex?
I don't think there's a gap to fill. This isn't Saudi Arabia leaving the market. And what's happening is Saudi Arabia has a gas initiative that's going to free up maybe close to 1 million barrels a day of liquids for export. So that's plus one. There's projects that are coming on with a lot of NGL content, and almost 1 million barrels a day of NGL. So that's plus two. And so I think the decision was simply, well, there's 2 million. Do we need to spend the money to bring on a 3rd million in terms of the capacity top? No, probably not. And going on from that, it's not that anything is changing in terms of activity. All that's happening is the projects that were already coming on are being pushed back. So there was a string of projects that were set to be done. They were accelerated, which was how the increase came in, and now they're being pushed back onto their original timetables. So the same amount of work gets done, but it gets done over a longer period, and there's some savings from no longer accelerating. So I think it makes an awful lot of sense, a financial decision. The market's perhaps overthinking this in terms of it sending a signal, but I think there's on top, if there is a signal, it's what the minister said recently, that the market is not valuing spare capacity. It should. I mean, spare capacity serves a very useful function in terms of stability of the market. But we're certainly not going to overinvest in spare capacity if the market isn't going to value that. So there is that message, but the overall dynamics don't suggest to me that there's a gap. This isn't something that anybody else is going to rush in, even if they had the ability to move into that gap. And I just don't think there is. As Omar said, it's at current prices, there's nobody who would rush into a gap, even if it existed.
Max, let's give you the final word. One thing you didn't mention in your earlier comments there was the idea of Mexico. Of course, amongst, so we have a 50-50 on this answer. Let's put that on social media and see. But Max, Mexico has an election coming up. We have an election, just worth noting, this week in Russia. President Putin is facing an election. I'm not sure there's any other candidates, but he is in the election. But Mexico has an election coming up in June. And of course, Mexican oil production new capacity has great potential, like the other Latinums, but it has been somewhat frustrated by policy and other things. Is this election in Mexico, Max, likely to deliver a new dawn for Mexican oil production?
Well, first of all, I think most of the companies are frustrated at this point with, with policies and the government. Recently, I think a couple of weeks ago, Shell announced that leaving the country, Equinor left the country. There are still some activity in the offshore, medium companies, Bridas and Eni and others. The EA was also announcing a discovery about 6 months ago. So activity, some activity in the offshore, but, not near the expectations. So first point, companies are really frustrated, with their situation now. My impression is that we are going to see continuity. That is my impression. Obviously, I could be wrong, but my impression is that we're going to see continuity and probably not a new dawn, not a new wave of investors. I think this experience, the last experience, has been very frustrating for a lot of companies, invested a lot of money, efforts, offices, people, and nothing happened at the end. So my impression is no.
No.
Probably. Well, I could be wrong. Elections are elections. My impression is that we're going to see some continuity on politics and policies. Ecuador is another country that had an election. They have new government, new political sign. Probably we're going to see some activity in Ecuador. They have a lot of potential as well. I have my hopes for Ecuador if they get their act together. So Ecuador could be seeing some changes. My hopes
Well,
are,
we will have to wait and see. But ultimately, the big player, Mexico, unlikely to deliver much change. We've had election results over the weekend in Portugal, the latest in the long series of elections this year. Portugal delivering a success for what would appear the right and the right and the extreme right also gaining ground, which is somewhat of a trend in Europe at the moment. We saw the similar in Holland recently. Still yet to form a government because they all have to sort of put together these coalitions because nobody wins any majorities. So these are delayed, drawn out processes to put together. But the right of center doing well and technically winning, as it's called, the elections in Portugal. We're going to leave it there. Oil Brent crude trading down this morning a little bit, 81.76 on Brent. Thank you so much, as always, Omar Najia, Global Head of Derivatives at BB Energy in Dubai, Paul Horsnell, Head of Commodities Research, Standard Chartered Bank in the UK, and Max Torres, Managing Partner, Plata Energy in Caracas, Venezuela, around the world in 30 minutes. Thank you guys so much. Have a great week. All the best.
Thank you.
Take care.